Good evening, everyone. In this video, we are going to discuss a few points about the structures, and first one is the how liquidity is helping us to uh, decide when you combine the structures. So let's this is Solana chart, and I'm going to discuss about some structures here. And this is 1 minute chart because I always follow 1 minute chart only. I never watch 5 minute, 15 minute, 1 hour. However, I can watch, but I don't watch for a reason because my trades are scalping, and I just this information, the last few bars are enough for me to take a trading decision. So in this video, I'm going to tell you one specific reason that will help you decide that your trading decision should be made with some points, and this is about liquidity. Okay, so I'll start from here, this bottom. So in this bottom, we are studying basically the price movement, and before we proceed, I like to tell you what is liquidity. Okay, so in basic terms, very simple, I'm going to explain. First of all, here you see there is first this is the, you see the high, the structure's high. Okay, and when it's broken here, okay, this is a signal. Like in this condition, we see the bars from here to here. We see if price break this is a high, this is an event. Okay, and this confirms an uptrend. So when there is a confirmation of trend, like you see this is an uptrend, so in this case we have to know, we have to see where is liquidity before this breakout. Okay, so in this case, here you can see this is a liquidity, because why, what is the liquidity? Simple, where price is making support like this. Okay, or here you see price was being rejected multiple times in this area. Okay, so there can be 1 2 3 4 5 times rejection, there can be 4-time rejection, there can be 3-time rejection, but only 2-time rejection is enough to confirm a liquidity. Okay, here you can see 1 2 3 and 4 times. So this is a support, this is a resistance, and this can be our liquidity area. There is no pure definition that this cannot be liquidity or this cannot be liquidity. So you just have to know the events. So what I'm talking about here is when there is a confirmation of uptrend, means then this high was broken upside, then we only hunt for liquidity. In this case, let's say price did not come break here, so this is not working for us for a liquidity. So okay, so as you can see, price is going upside. Okay, and price is going upside, that's all, you know. So there are basically two types of liquidity. Here I told you that the resistance, this is horizontal liquidity, and there is another type of liquidity which is dynamic liquidity or trend line liquidity. So what's that? Is just if I draw a line like that, okay, it's clearly seen that this is taking a support and this line multiple times area. Okay, so this is a liquidity. Okay, simple. So one more thing I am going to tell you, that how to use this liquidity to confirm our trade. Okay, so first I will tell you on this example. In this move, you never find any liquidity. Okay, this is not a liquidity, this is not a liquidity. Okay, this is not a liquidity, you find no liquidity. Okay, so in this case, if you are using Fibonacci to sell somewhere, like, and there are two types of zone. First one is, if this is high, this is low, then this is 50% area, okay, and this above 50% area, this is called here, this is discount zone, okay, and this is premium zone. So in this condition, if you are always going to make decision on the discount zone, not on the premium zone, okay. Premium zone is for scalpers or for professional traders, but you as a retail trader always look for entries in the discount zone. So in order to make a decision to sell on the discount zone, what you have to do, the first and very important thing which you have to do is check the liquidity. If there is no liquidity, drawn liquidity, then there is no reason that price is going to reverse. No reason, okay. So if there is a liquidity, then only the price is going to reverse, or there is a probability that price is going to reverse. But if there is no liquidity, so you never sell here, okay. This is invalid, this discount zone is invalid, because there is, in this move, there is no liquidity. Simple, okay. That is why price did not, this was a false move, this is 50% area, this was a false rejection. If you sell here, your stop loss will always hit, okay, always hit, because reason is simple, there is no liquidity in this move. Now let's understand the example where you can see the liquidity, okay. So from here price is moving up, we know that price is going to move up, that's all. So in this case we do the analysis from here, okay. So first of all, we have to mark the events. For example, this is an event because it's breakout. After this breakout, the trend was changed. Now once trend is changed, we have to find the liquidity, okay. So I'm going to mark the liquidities. So let's say it's breakout, and before finding the drawn liquidity, we have to only consider that if there is a discount zone, then we are only going to study about the liquidity. Otherwise all the liquidity are waste for us, it's for no use, okay. So for example, if you draw a Fibonacci from here to here, okay, if you draw a Fibonacci and you add a discount zone, let's say this is a 50% area and this is our entry area, okay. So did the price come here? No. So there is no reason you should draw the liquidity here, okay. This is a liquidity area, but you are not going to study this. Why? Because price never came here, okay. So if we go above, you can see price never came here, okay, never came here in this this point. You see, this is 50% mid zone of this Fibonacci, and we are only going to see entry zone in below this. This is called discount zone, but price never came here, so we are not going to do any analysis, okay. But here you see price still did not come here. It's kind of a very big range, so there is no analysis. We are not going to take any trading decision above this line, okay. So now we have to find another analysis. Let's say price never came here, so we are going to now do some analysis from the top here, okay. So in this top here you can see we have to find an event which confirms that there is a downtrend. So here you can see, if I add this line here and you see this is a breakout. So this is a confirmation of a trend change, which is often defined as a very many names. Some people call it CB1, some people call it the change of character or break of a structure. There are many names. Whatever, you just know that this is a area where last swing point and it is breakout. Okay, once it's breakout, then we have to see what's going on. So if I add it here like this, after this event, okay, this is a breakout, then we add it like Fibonacci like this, and this you can see, you can find a lot of liquidities. Like this is also, you see, this is a double top, so this is also liquidity, but we are not going to focus on that. We are just going to focus on any liquidity which is above this midpoint. Okay, so if I add a line here in the 50% area, you see this is this area above this 50% line is discount zone. So here most of the people would love to sell if the price comes, there, but on the last analysis you see the price did not come there, so there was no entry there. Okay, so don't just hunt for forcefully, that if the price don't give you entry, then no need to take it. Okay, just leave it. So in this case, price is giving us the entry. Okay, so this is the line 50% mid zone of the Fibonacci, and let me add correctly. Okay, you can see the mid zone, and above this we have to find the liquidity, drawn liquidity. So what I told you, what is a drawn liquidity? Okay, here you see price came here, and this is not a drawn liquidity, this is not a drawn liquidity, but here you see in this condition, this area there was a double top. Okay, for one moment, let's suppose if price did not create any liquidity and just fallen like this. Okay, if price fallen like this, there is no drawn liquidity, this is not a liquidity, this is not a liquidity, this is not a liquidity. Okay, this is not a liquidity. In this case, you never sell. If price come there, you never sell. Okay, but in this condition, you see price, how the price come. Okay, like this, here price created a liquidity. Okay, this is a confirmed liquidity because this is a double top. Okay, so you people know that price went down, this is a area where price coming, and this is also being validated because it's our 50% zone, it's above the 50% zone, and this is called discount zone. Okay, so this is a perfect entry here you can take. So let's say what happened next. You can see this was a liquidity, price came here and just given a fall. Okay, you can easily take 1:2 or more trade than it. Risk reward depend on your analysis. Okay, so let's suppose this was our target, and now we are going to study this analysis. Okay, here you see how the price is coming like this. Okay, there is no liquidity, nowhere there is a liquidity. This is not a liquidity, 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 there is nowhere the liquidity. So in this case, if price comes here and gets rejected, you are not going to sell it. Okay, because there is no reason, that if price comes to this area, it should be rejected. Even if it's being rejected, you are not going to sell it. Okay, because I don't find any liquidity here. And there are some advanced types of liquidity, but I'm not going to discuss it here. Okay, just what I'm telling you, that's the point, just keep it that. So here you see there is again this low was broken here. So in this case we have to find a liquidity here. So in this swing here, when this it was broken downside, okay, then just closely analyze this swing leg, okay, and first of all we have to draw a Fibonacci like this. We know this is our midpoint, and above this, if price comes in this area, we are going to study. So where is the liquidity here? Okay, so in this case you can see how price is falling. Like this is not a liquidity, this is not a liquidity, okay, this is not a liquidity. This is area, a moment please. Okay, so in this condition, this is a liquidity area. Here you can see clearly, okay, because there were multiple touches here, and this area is liquidity. And in this case, let's see what happened when price comes in this zone, okay, and this is above 50%. So here you can see price came, and it's easily given you a little bit target like this, okay, it just given you a target. After that price reversed, okay. So your risk reward in this case should be like, if this is liquidity where you are going to sell and you are going to target, then this high should be your stop loss, okay. So let's say this is your stop loss and this is your entry. So you can see it's already giving you more than 1:2, okay. This is your risk area, you are making 1:2. Now price reversed, so let's understand this. How price reverse is simply just make sure that you add previous swing break that confirms a trend change. So in this case, this is a previous swing. Here you see it was broken, and if it's broken, then we only search for the drawn liquidity where below this 50% of the Fibonacci zone. This is 50% of the Fibonacci zone, and we see is there any liquidity here. So you can see here this is a confirmed liquidity, okay, because there is a double bottom here in this condition. So when you see price just coming near to this, and then it reversed, because there was two conditions. This is 50% area and it was discount zone. We never find liquidity on premium zone, okay. We always find liquidity, drawn liquidity on the discount zone. So here you see price came here and it reversed. It reversed after that. Now this is a new swing. Here you see this is a new swing, but there is nowhere liquidity, okay. Here you see how the price move. Price is moving like this is a liquidity area, but we are not going to trade this because kind of risky. It's not in a, it's very you know, it's nearby the bottom, so we are not going to trade this. And now how price move, you can see. So this is not a liquidity, this is not a liquidity, okay, this is not a liquidity. So even price came to this discount zone and reversed, you are never going to buy here, okay, because there is no reason to buy here. We only find when there is a liquidity, we are going to make trading decision there. Again, in this condition, you see there is no liquidity, okay. In this area there is no liquidity, so this area is never justified to buy. Let's say you add a Fibonacci like this, you are not going to buy here because there is no liquidity. So you can see price went down. So now again one more example. You see the premium area is this one, discount zone is this one. So in the discount zone there is no liquidity. Okay, so you're never going to sell. This is not area to sell. Okay, and this is a liquidity. This is a liquidity, but you cannot make trading decision here because it's not a discount zone, it's a premium zone. Okay, so this is a way for confirming if you have to sell on Fibonacci or not. So I hope this video is helpful. Thanks for watching.